Hey everybody, Tom Gentile. Welcome to Tom's Trading Room. Glad to have you here once again for another Monday. It is Monday, August 16th, 2021, excuse me. Guys, you know what we do here. We show you how to spot opportunity, create alternative risk trades, and plan, execute, and manage those trades. I'm masking on today. In fact, here it is. Can you hear me? This is actually a mask that LG makes. They debuted these at the Olympics not too long ago, and I got my hands on a pair of them. But it's the news here in Florida is to mask or not to mask. That is the question. And with more people kind of catching things around here, if I'm going to be in tight spaces, I'm planning on definitely covering my mouth and my nose in the process. So glad to have everybody here. Let's go ahead and get started. Before we get going, I got tons of stuff I want to do with you today here in the next, let's call it the next hour. Before I get too far down the road, let me go ahead and at least put up the, we'll get back to that in just a moment. Disclaimers, okay? You can read this entirety. All you got to do is just hit pause on this video, on this live stream. Two quick things. Number one, stock options and crypto has large potential rewards, but also large potential risk. And number two, I'm not your money manager. I'm not an investment advisor. I'm here to show you what it is that I do to spot these opportunities in the market. So glad to have you here once again. Here's what I'm going to cover today. I want to do an overall market view. So what's going on today based on the news that came out of the Middle East this weekend, right? More importantly, what's going on not only with the stock market as we just opened, but what's happening in cryptocurrency. Something happened in Bitcoin and Ethereum that I have not seen. Sunday didn't fall off, all right? We're getting a little bit of pullbacks today, but this is the first weekend that we actually ended higher on Sunday than we started. All right, we didn't get the big bounce like we did last early Monday morning, but we definitely held the highs that happened on Friday as we went into Saturday and Sunday. So that's exciting as well. So next, I want to talk about what's cheap and what's expensive. Okay, so I have scanned every optionable stock out there. I'm going to show you my top 10 cheap options, my top 10 most expensive options, where you can get all of these absolutely free. And finally, I want to talk about my pre-Labor Day market buying pattern. Okay, it's happening right now. It's not happening in 2 weeks, in 3 weeks, when Labor Day is already going to be on us. It's happening right now. And so part of being a pattern trader is getting involved in the markets before everybody else knows what's happening or before they hear the narrative that's being pushed by mainstream media, and then getting out before the event happens. So the event in question today we're going to talk about is Labor Day. All right. So that is my plan for everybody over the next hour or so. So let's go ahead and let's start with what's going on in the overall markets. I want to blow this up so everybody can see it a little bit more and see me a little bit less. So good morning to you, Rice. Good to see you there. Hershey, glad to have you here. I was looking at a trade on Hershey last week. Really kind of a sideways trade. But as chocolate tends to fizzle out a little bit as we head into the end of summer. Mandy, good morning. Good morning to you, Schumann. And so as we move forward, let's talk about what's happened this morning. So what you're looking at here on my chart is, and I will say this, I'll spell these out for you. I'm using the Thinkorswim platform for this morning in terms of looking at charts. I am looking at /ES. So /ES is the E-mini S&P 500 futures. These start trading at 6 p.m. Eastern time on Sunday. So if you want to get an idea on when the markets are likely to open after you come home from that long holiday weekend, or if you're vegging out and you're sitting in front of the TV and it's 6 p.m., or maybe you're licking your lips from Sunday's dinner, I want you to do yourself a favor. Open up your smartphone, do whatever it is you have to do. If you don't have access to the overnight markets, CNBC World, Bloomberg. These are places you can go at 6 p.m. Eastern time too, and you'll get a good idea on where our markets are likely to trade in the overnight session Sunday night as we head into Monday morning. As you can see what's going on, we started out a little bit on the high side, just a bit off of where we closed, but it tended to move lower into early hours of Monday. We hit lower lows at 3 a.m. We hit lower lows again at 6:15, and it looks like we want to trade down even more as we're trading into right now the opening 5 minutes of the day. All right. Now, what does that translate into in terms of SPY, TLT? I'm going to go ahead and show you those right now. So let's take a look at SPY. It's going to also open down almost half a percentage point. Let's blow this up so you can see what I'm looking at here. This is the close. We actually closed above the first hour window. It was really tight. It was a tight trading day on Friday. And a lot of traders might have got suckered into this move when we were coming down here and piercing these lows. But that didn't last very long. We came up and popped those highs at the close. But oh, what a difference a weekend makes as we're coming in and making new lows on SPY. DIA is the ETF for the Dow Jones. It's also moving lower. All right. So if you want to look at the stocks on the Dow Jones Industrial Average, this is one way of doing it. DIA is the symbol. It too was tight. It too fell into the afternoon on Friday. It did not close on its high, but it is definitely making a move to the downside, down more than $2, which for those of you that have never followed DIA before, you take that number, multiply it times 100, and that's about where the Dow is right now. So when this says down 214, then it means that the Dow Jones Industrial Average is probably down around 214 points for the morning. And the last one that I want to look at is QQQ. So the Qs, if you could see here, definitely the strongest on the day, and I'll show you why. Take a look at what the Qs did. This is the Qs on Friday. Pretty much moved in a sideways pattern and moved higher to the close. We did not open below Friday's low. In fact, we opened down and we're starting to trade higher, and we're down about 0.25%. So definitely the Qs are down about half the rate of the S&P and of the Dow. All right, so that just tells me that coming into the day, I like the Qs if I want to be long something. I'm going to tell you another reason why I like the Qs as we get into what's happening here with the rest of the markets. So right now, if you're just joining me, guys, thanks for hanging out with me. We're doing a market overview. I'm going to switch to my charts. Do me a favor right now. If you want to help support this channel, very simple. Hit that like button below. That does help support the channel. If you're brand new with us, welcome. Subscribing will get you these videos. I've got a big announcement I'm going to share with everybody at the end of this session regarding live streams going forward, because it's going to be a good one. So hang out there for me. All right, so let's flip the script here, and let's take a look at what's going on the day charts. For this chart, I am using tomsoptiontools.com. And if you want a free trial of tomsoptiontools.com, check out the description below this live stream. You'll get a link there. Click on the link if you've never tried us before. Check us out 2 weeks, absolutely free. All right, so the S&P, we had this this higher high and lower high move. I decided to put charts on here that go all the way back to about the end of April, but I wanted to capture what was happening Memorial Day weekend as we're heading into the last bit of summer here. Labor Day, even though Labor Day doesn't mean that summer's over, it really has the unofficial end to summer. And when we run into these last couple weeks of August, I got to tell you, I mean, the news didn't sound great coming into the weekend. Got more COVID cases going on. Here we go. Let me put the mask on again. More COVID cases. And in Florida, it's now become mask off, mask on, who knows. But more COVID cases. Also, couple that with the fact that the Taliban has now captured control of Afghanistan. It took them 10 days to pretty much erase what 20 years took the last time they were in power, over 20 years ago, and they grabbed it back in 10 days. So that's obviously putting a little bit of nervousness on the markets as well. But as you see, the stocks, like stocks in the Dow, stocks in the S&P seem to be a little bit weak on that. It's causing tech stocks to actually become the strong point as of this morning. Now, when you take a look at the day chart here, day chart shows us hitting all-time highs once again. We're going to get some pullbacks. Is it going to last? If I am going to strictly trade on patterns, which is what I do, I expect to see higher highs between now and Labor Day. We'll get into why I see that here in a little bit. But taking a look at our market overview, the trend, the momentum for the S&P, the momentum for the stock market is definitely still on the rise. Moving forward, let's take a look at TLT. Now, TLT is getting a pop today because of what's going on, because of the news that we heard that came out. So, there's a little some traders rushing into TLT, buying up TLT for that reason. All right, that is perfectly fine. We went out on Friday because of that. We're coming in on Monday because of that as well. But as you can see, volatility is definitely fallen off on the bond market and the stock market for that matter. We'll check into the stock market with volatility as well in just a few minutes. So TLT definitely getting a little bit of a rise, but it is well off the highs that we saw back at the middle of July, about a month ago. Cash is still trading near those high levels of summer. So if we're looking at this as the entire bit of summer, which it basically is for now, you can see where we're around Memorial Day, where we are right now. We double topped. We came off of that last week, and we may get a little bit of a rise on UUP this morning as well. But again, UUP, US dollar, when you're looking at versus foreign currency, is on the high side this summer. USO. Okay. So this is one that if you've been a fan of the broadcast here for several weeks, I'm short USO. I've been short USO for about a little bit more, give or take about a month now since we've come out of mid-July. And so if you see where mid-July was, we're trading right around here, around the dotted line here at 49. And I actually saw it again, looked at it again at 51. We closed out at 47.43, right? Where is that likely to go? Well, with concerns in the Taliban, that's with the Taliban taking over Afghanistan once again, that's causing a little bit of strife in the Middle East. That could cause a volatility upswing short term for the price of oil. And that's something we want to definitely look at. But I still see the long-term pattern in oil being down. GLD. So this is one that that actually surprised me because we were having a nice move up into Labor Day weekend. Labor Day weekend actually turned out to be the high so far for summer, for gold and for GLD. GLD was trading right around above the 178 area. We broke down into the mid 160s. All right. We held that for all of one day. Broke down to new lows, to new summer lows below 162. But had a couple of moves to the upside. Last week I sold puts on GLD, and all of you in this room know what I do with GLD. I might not like this as a short-term trader, but I love it as a long-term investor. And so what I typically do is sell puts on GLD. Sometimes I get some GLD stock. Sometimes I don't, right? It's part of my overall investing plan. I actually was looking to sell these into Friday, but they were so cheap. You see this move? See this move that happened, this red line here? This red line is an indicator of whether I want to sell puts or not. Down here, this is the lowest it's been during summer. This is the highest it's been during summer. So last week, when GLD fell off a cliff and went from above 170 to near 160, the options on GLD got substantially higher. And I decided it was time to sell some GLD puts. And I did. Smart move. I didn't end up getting any stock last week. I was looking to sell this week, but look at the thermometer. Look at the red line for GLD. That means the option prices got extremely cheap. In a matter of a week, it did. So I'm holding off so far for now on selling any premium, option premium on gold and on GLD. Okay. Let's take a look and see what's going on in the community. Guys, again, I want to welcome all of you hanging out with me this morning. James, Nito, good morning. Michael, good morning. Daniel, Jim, hi to you. Edward, good to see you. If you have a stock that you want me to take a look at here, and what we're looking at today is we're looking at stocks. We're looking at stocks, and we're looking at option premiums on these stocks. So if you want me to take a look at not only your stock, but where those option premiums look in terms of being cheap or expensive right now, then now is the time to hit me up on the comments section. All right, come on into the comment section. Tell me what you want me to look at, and I will be glad to put it on the screen for you here in the next few minutes, guys. All right. So, one of the stocks that I started off this morning with, and that was Hershey, HSY, because last week we were looking at a spot on Hershey, and we were looking at a particular trading strategy, and it was really literally going sideways. So I want to bring up Hershey to start off the morning with HSY. So HSY, take a look at this one. You can see here what is going on with Hershey. So now we're only looking at the summertime charts. So this could be higher on the way back. But as far as this summer, if you take a look at Hershey, here's the low vol trading around 14. Here's the high trading at 32. Now it got high right before earnings, and then it fell off. Went from the 30s down to 16, and that happened. A lot of that happened right after earnings. But you can see here that the volatility, the options premium on Hershey, extremely cheap compared to where it was. All right. So let's take a look. Jim is saying take a look at Oracle. Let's take a look at ORCL. So ORCL here. What do we see happening with Oracle? Not the Oracle of Omaha. This is the Oracle of San Mateo. That's headquarters for Oracle. So take a look at Oracle. You can see stock chart was down here in 76, around the 76 range. We double bottomed or came very close to that, and that was off the charts from April, right? But really kind of hitting some support levels down here. That happened right before the highs on the implied volatility. The option premiums got very expensive right before earnings. As soon as that earnings report came out, boom, vol went from 40 down to 20. That means that the option premiums dropped in half. So even if you gotta, if I'm looking at buying call options, this is not the day to do it right here, because if you bought calls, you lost money. If you bought puts, and we went from 82 to, let's say, 76, it's possible that you could have lost money buying puts. The only thing to do here would have been to stay out of the way, or if you were an option seller, potentially selling options. All right. Take a look at this going forward, though. The options got extremely cheap, and then we had the move to the upside. But Oracle's been in the pattern that a lot of stocks have been in, especially stocks that are in the queues, and they've been moving sideways. And Oracle's been in this pattern from about $85, $86 up to around 91. Got up there, dropped. All right, back down to 87. It's up there again as of Friday and dropped into Friday. And so right in this area, one thing that's happening is this option premium is getting cheaper. So as I'm looking at this, Jim, I'm saying, well, do I want to buy this if I'm bullish? Do I want to buy calls? If I'm bullish, do I want to buy puts if I'm bearish? Call options, maybe the spreads might make sense in here too, but the options are definitely cheaper than where they've been. So thank you very much for the symbol. AXP is next. Let's take a look at AXP. All right. AK is asking about AXP. Let's take a look at it, and we can see here a lot of the same things happen. AXP has had a nice run to the upside, and it has pulled back, and a lot of stocks in the financial sectors pulled back. I actually was looking at MasterCard last week, and I'm thinking about dipping my toes in and getting a little bit more, adding a little more to my bullish side on MasterCard. But the interesting thing that's happened is since the earnings, when the option premiums were up here near a 40, right? 40 is a measurement telling us how far that option traders are looking for this stock to move in the future, right? And they were looking for a much greater measurement, all right? So think about this. If the VIX is trading at, let's call it 15 or 10, if the VIX is trading at 10, well, for American Express to be trading at 40, that means it's definitely gotten, it's got options that are 4 times time value, 4 times the price of those in the overall S&P 500. After earnings, though, and even before earnings, we started to see the drop. And we've seen these options go down to where they're just a bit above half off right now. So definitely option buying seems to be the way to go for American Express. All right. Richard's asking about Cisco. Let's take a look at Cisco, CSCO. And I'm going to update Cisco right now. And you're going to see, now Cisco's a little bit different. I'm a holder of Cisco. I'll tell you what I've done with Cisco, though. Ever since we kind of came up here and moved out, I've actually got covered calls right around the $55 area. And so if those, my covered calls means that I have the stock, but I'm also short the calls. And if by the end of this week we are at or above 55, then my stock's going to get called away from me. But that's what I'm looking to do as we head into summer, the end of summer, is start to trim my positions based on patterns that I see happening after Memorial Day. So I thought, you know what? What better time to start to unload some of my long stock positions than during a time where everybody wants to be a buyer? So there we go. Although I don't think the bulls are done yet, okay? Let me make that perfectly clear. I don't think the bulls are done yet, and I'm going to show you one of my favorite trades that's coming into Labor Day. Going to get to that here in just a moment. Well, a few minutes. So this is Cisco going higher. Look what's happening with Cisco, though. The IV's going higher, too. Here's the reason why. Cisco's got earnings in 5 days. So their earnings are due out, actually 5 days. They're due out here on the 18th. This is going to be Wednesday, and it's going to be after market close. I'm actually looking at charts as of Friday's close. But moving higher, as you can see, that ball's moving higher into earnings. So definitely don't want to be jumping all over Cisco as a call option buyer if just a few weeks ago we were trading down here at 14 and now at 28. The options have doubled in value on Cisco in just a few, really just a few weeks. All right, Nvidia. Let's take a look at Nvidia. And you know what? I do want to move over into cryptocurrency. So I'm going to stop right there with you, Rice. You're going to be, I'm going to pause after this to take a look at cryptocurrency. So take a look at Cisco. It's not Cisco. Let's take a look at Nvidia, NVDA. Let me let you know this. I, full disclosure, have a long position. I own calls and call spreads on Nvidia. All right. And so just knowing that, my plan and what my takeaway is for Nvidia is that I see Nvidia above the 210 mark, which is really an area where a lot of shorts are, right around that 210 mark, and really closer to 220 is where I expect to see this stock go. So we've had a pullback last week, but at the end of the week, we saw a couple of buys coming in. All right, where's Nvidia heading today? Let's go ahead and take a look as the S&P and the Qs are starting to break down a bit. NVDA, no surprise here. It is breaking down with the rest of the market. It was, however, higher this morning. We were up a good bit. We were close to 203 before pulling back, and trading around 199 right now, down about 1 3/8, 1.4% on the day. But again, what I see here with Nvidia is I see that rollover, and I see us taking out these old highs that happened back in July and then again at the beginning of August, and we'll see where those end up going. We got earnings on Nvidia in 5 days. Maybe that's the catalyst that's going to take us higher. Let me just mention this with Nvidia. Going into this earnings report, I don't want to be a call buyer. All right, I don't want to be a call buyer because this was the time to be a call buyer. And that was after the last earnings report. And I'm not talking about the fact that I am a know-all, see-all. I did not see this move coming. I simply said if you're bullish on Nvidia, you want to buy calls when those prices are cheap. They were trading in the low 30s. They're now in the low 40s as we head into the next earnings cycle. And so, for this, I ended up picking call spreads because I wanted to negate all that time premium. All that time period I was buying, I wanted to sell something against it and neutralize that volatility effect. Okay. So there you go. And that is on Nvidia. Let's move over and let's take a look at cryptocurrency. So back to cryptocurrency. And over here, I'm going to go into my crypto tools. I'm actually going to go in and look at charts of crypto and charts of crypto that just trade on Coinbase, because that's where I spend most of my time when it comes to trading cryptocurrency. Now, here, you're not going to see volatility charts, all right? And the reason why is because there are not options at this time that trade on cryptocurrencies, but who knows? Who knows what could be coming for these? I'll tell you what, if regulation happens, and I mentioned this before, I believe regulation might actually be a good thing for cryptocurrencies. And here's why. Because everything that ever traded outside of regulation that became regulated eventually moved extremely higher. Look at what happened before the stock market when bucket shots used to trade. All right, bucket shots were shops all over town that bet on prices of not only stocks and companies, but also commodities. All that got reined in by what is now known as the SEC and the CFTC. And look what happened to stock prices when that occurred. Stock prices went extremely higher. Most importantly, if you take a look at marijuana, all right, the marijuana industry, which was not regulated, now all of a sudden we're starting to see states come in and regulate for medical marijuana, and not only that, but recreational. And look what's happened to companies. Companies in the marijuana industry, well, they've had a lot of this, but they were so much lower than before states started to regulate them. The SEC comes in, the CFTC, and regulates cryptocurrency. Here's what's going to happen. A lot of volatility followed by a lot of big institutions, insiders, retail traders, all buying in, because now what the CFTC, what the SEC, what they do to certain products that will be done to BTC, will be done to cryptocurrencies if government regulation comes, is they are basically tipping their hat and legitimizing that as an asset. The IRS has already legitimized it. They want to tax it. But if government comes in, big government comes in and legitimizes it, yeah, they're going to tax it. Yeah, I mean, Big Brother's going to be watching. There's a lot of conspiracies on that. But I'm telling you, if your goal is to make money in cryptocurrency, I believe you want government regulation, because government regulation means that it's coming to the big dance. So that being said, here's BTC, and I'm actually need to update this. Here's BTC now. Very, very interesting things have been happening. This is a 200-day chart. I'm going to move this back to 125 days because we don't need all this data for BTC. I'm also going to put some Fibonacci charts on here. This takes us all the way back to the highs that we saw, the closing highs back in April, to look at this. I mean, in less than a month, we jumped to, we jumped to the first low that we had in BTC, back down around 30,000. And it happened, that was in May. In June, it happened again. And in July, it happened again. So 3 months of extreme lows as we headed into summer. And look what's happened since then. We've moved up. We touched the Fibonacci ratio there. That's 42,568. We bounced off that for a week, came back up, crushed it, touched the next area of resistance. That's the 50% retracement level. 46,514.30. We bounced off of that a few days. All right. About 4 or 5 days and up, and about 4 days here and up. And now what's happened is, guess what? Support or resistance is now becoming support. And yeah, we're seeing cryptocurrencies come off a little bit this morning. They had a very strong weekend. We really stayed up there near those highs. We were near those highs again late last night, coming into today. Big moves higher. We traded as high as 48 over the weekend. So that puts us right up here in the middle of the range. Next stop, 50,459. All aboard. That's what's going on with BTC right now. And where did I get these numbers from? For those of you that are new with us, what we're looking at here is Fibonacci ratios. This is the high, the all-time closing high. All right, so don't chop me up and say, Tom, I saw Bitcoin. It was above 60. It was at 65. Yeah, this is the all-time closing high that we see on Bitcoin, and it ran down to the lows that we saw about a month ago. Right? This is back again, not even a month ago. 720, 721. A month ago, We were at 29,795 as a closing low for BTC. What we do is we take that high to low and we say, well, if it ran up 30% off that low, where would we be? If it ran up 50% from the high to the low, where would it be? If it ran up 61.8% off the low to the high, where would it be? We've already hit target 1. We've already hit target 2. Target 3 is next. And if target 3 gets hit, if we get above 50,000 and we hit this area, by the way, this is going to be a pretty major resistance area. But if we close above this, then see that next number up there? That's what we'll be gunning for next. This could take, this 50,459 could happen in a day, folks. It could happen in a day, right? Could take a week. I do think we're going to see a few months before this ends up happening. 63,233. So that's my take, Rice. That's my take on BTC and crypto. And by the way, we can look at one more. Let's take a look at one more of those while we're at it. Let's come on over and look at the sister ETH, which is Ethereum. Let's take a look at Ethereum. Wait do you see this? This chart really says a lot. So Ethereum's all-time high did not happen until May. And then we saw the pullback that came in again at about the same time Bitcoin was pulling back. Ethereum pulled back to new lows, 1786. So we went from 4178, 1786. And here is our areas of retracement. 2700, nailed it. 2982, 3 days later, nailed it. 3264, nailed it. So we actually went above all 3 of our fib retracement levels. What's next? Well, what's next is round numbers. Before we get to 4178, I'm seeing 3,500, 4,000, and then we look to take out 4178. Of the two, Ethereum is the stronger coin in terms of its Fibonacci levels, in terms of pullback. We see these pullback resistance areas, 38, 50, 61. We've already cleared them all. And now we're just below that 61.8% retracement level, kind of moving back and forth in there. But that's the area that we see happening right now with those particular cryptocurrencies. All right. So that's crypto. Now let's jump back over to the stock market, because we talked a lot about cheap and we talked a lot about expensive. And so as I move back over to my tools, let's back over to our tools. And, you know, I would be remiss if I didn't talk about this particular chart. And I'm going to go in all kinds of stuff I can do in here, as you can see. But I want to look at Coinbase, C-O-I-N. Coinbase. Let's see. Let's get to Coinbase. Let's take a look at what's going on with it. Okay, so this is now taking a look. This is updated. All right, so we can see what's going on with Coinbase. Coinbase actually opened a little higher today. It's down slightly, not a whole lot. Still trading above 260 on the chart that we see here. Coinbase really made a nice rounding bottom, triple bottom, 1, 2, 3, and then started to lift off. Had great earnings. Coinbase is a crypto play. All right, it's a crypto play. If we see Bitcoin go higher, if we see Ethereum go higher, really, if crypto becomes the news again, we get above 50,000, a couple things are going to happen. First of all, we're going to get above 50,000. The second thing that's going to happen is we're going to see a situation where mainstream media is going to start talking about crypto more and more and more. They're going to put the ticker down at the bottom of the symbol again. They're going to start to advertise crypto once again. It's already starting. There's a quiet advertisement for it now, right? I'm talking about crypto. I'm talking about this next buying opportunity that's coming in right now. But once mainstream starts talking about it once again, then you're going to see these prices move even higher. So that's what we're looking at with cryptocurrency. Let me pop back over on the chart and look at coin. The one thing that we do see happening with coin is the volatility just got sucked right out of it after earnings. It's starting to make a little bit of a move here, but the reason this vol has gone up that you see here today is because of the price action that's happening in the overall markets. Okay. All right. So let's take a look at, once again, my morning report. My morning report is going to show you a lot of things. It's going to show you, most importantly, what I have at the top are the most expensive options on stocks and the cheapest options on stocks. Let's take a look at those right now. So I've got Infosys on here, CNI, BGNE, CMP, Bilibili, FUV, EL, UI, KWeb, and NUE. Those are the most expensive options we've got. Let's take a look at those in a little bit more detail. So if I click on info, take a look, you can see what I'm talking about here. This is Infosys, my bad. This is IHS Market Ltd. As you can see here, $100 stock back in April, and it's now $120 stock here today, or as of the end of the week. Look at what's happened with the IV. We had a big pop and drop back when it was trading around 100, but the lows are down here around the 18 level. The highs are, we're hitting the highs right now. 34 is the high. And the earnings are not for another 46 days. So we're seeing a lot of vol come into this particular stock. Reopening stock? Perhaps. CNI, Canadian National Railway. And we talked about this one. We were talking about this one last week on a couple of our webinars where we saw the lows back before earnings. We saw lows when the stock was trading around 118. Stock dropped, gapped down. And after earnings, we didn't go down in vol. In fact, we've been doing nothing but kind of moving higher. We moved lower before our most recent earnings report, popped up from 18 to 32. After earnings popped down, but didn't last. This is really interesting. Canadian National Railway right now has options more expensive now than they did just about a month ago when the earnings report came out. So earnings for not another 67 days. I'm going to round it out with FUV. If you take a look at the high IV, this is the highest these option premiums are, right? This is the lowest that they've been in the last year, and this is where they are currently. Take a look at FUV, all right? 160 vol. Now, the high was 213, the low was 104. Still on the high side, but where is it? Well, take a look at where it is in the last 6 months. The low, 105. The high, happening right now, you can see the chart has come off here. We've got earnings in 3 days on this one, all right? Now, here's the thing. This is an expensive option. I would not be buying options on FUV. Arcimoto, I would be looking at either some sort of an option sale if you like this stock, or the stock's only $14, $14.11. It may be worthy of just simply buying the stock if you like it to the long side. Now, what this report doesn't tell me, it doesn't tell me what's bullish and what's bearish. It's simply telling me where the hot spots are and the cool spots are in options surrounding these stocks. So take a look over here at cheap IV. All right, so our cheap IV, we got Uber on the list, right? As it is down, way down from where its IV was earlier this summer. Pins, Viacom, FCX, Intel is on the cheap list. Tilray is on the cheap list, all right? So marijuana and chips and microchips on the cheap list. The power Qs and the QQQs, Plug Power, Ford at the top. And now, when you see the high IV, all right, and you see the low IV, and then you see the current IV, which is exactly the same as the low IV, that means that the option prices are as cheap as they've been in the last year. Take a look at Ford. Here's Ford Motor, and you can see here with Ford Motor Company, I mean, we were high right before earnings when the stock was trading right there around 12.5. Then it dipped down, then it had the big rise up. And this big rise up, a lot of this was meme related as this thing just started to climb. A little bit of information about electric cars, and then the meme guys grab it and bring it right up. And then what's happened since? Lower highs, lower lows, lower highs, lower lows. Earnings came out, they beat expectations. A pop and a drop, and then we're just continuing seeing that moving lower. But look what else is moving lower. The implied volatility on this, which was trading above 50 just 2 months ago, trading above 50. Now we're down in the low 30s, as low as we've been. Ever a time to buy options, whether you're bullish or bearish? Ford is the place to be. So that's what we see happening with Ford. Now, this is really interesting too. The Qs, An actual index made the top 10 list last week. So I've got the Qs on here. Take a look at what's going on. This is, again, this is looking into today. All right, so you've got the Qs. We had vol pegged just above 20 at the end of spring. We had a pop up to as high as 28. That's when the Qs made that drop down. And then we started the long road out of Memorial Day when the Qs were trading down in the low threes. They've ran up as high as near 370 before starting to pull back a little bit. But look at this vol. This vol has dropped quite a bit. And you can see here, as the vol has dropped, what has happened to the Qs? They've gone higher. Now, you could look at this a couple of different ways. Number one, you could say, you know, I've been told, Tom, when the VIX is low, it's time to go. And when the VIX is high, it's time to buy. And is this the same as the VIX? And the answer is, yeah, kind of, right? But I don't think we're there yet. I don't think we're there yet, and I'm going to show you why I don't think we're there yet. So take a look at this, all right? I want to show you the next thing that's on my list today. And this is really where I want to, the segment I'm going to do is going to really kind of end us. And that is, you know, we've talked about the overall market. If you're just kind of coming in here, guys, we did an overview on stocks, bonds, cryptocurrencies, gold, oil, and we also talked about cheap and optionable stocks. We did that. So what I want to talk about now is something called my pre-Labor Day buying pattern, right? This has happened. I put this on a grade of about an 80 from a 1 to 100. That means 80% of the time, this pattern has worked between now and Labor Day weekend. Did I go back and look at it a couple, 2 years, 5 years? No, 20 years back, I ran the data. And I want to show you what I did. All right, before I do, I want to mention this. For those of you that are brand new with us, welcome. We do things a little differently over here. We are, in this case, I'm a pattern trader. I'm not going to sit and look at AMC or GME or meme stocks all day long and get puffed up when they go up and get, puffed down when they go down. I don't do that. Not an emotional trader, right? I'm a system trader. I'm a rules-based trader, and I'm going to show you patterns that I find in my everyday trading. So we spot patterns. What we then do is look for alternative trading strategies to take as much of the risk out as possible, and then finally plan, execute, and manage those patterns. I'm going to do that right now with this pre-Labor Day buying pattern. I want you to do something for me. If you're new and you want to get videos like this, subscribe to the channel. You can do that. It's very simple. Ding that bell. You'll get these videos as soon as they're updated. We do about 2 or 3 videos, but I got something special I want to talk to everybody about before I end today. But the second thing you can do to help support the channel is give us a thumbs up. That helps out, and I appreciate that very much. All right, let's talk about this pre-Labor Day pattern. So I went into something in our tools called Money Holidays. All right, I got all kinds of little scanners here from the Money Calendar, which is something that we look at on. We look at the Money Calendar as looking at days. All right, what I mean by that is that we look at the actual calendar for the whole month. All right. If I want to look at something that's intraday, I'll jump over and look at the money clock. I've also got clocks and calendars for cryptocurrency. And I have an app that I can look at any stock. I can type in any stock and I can get an idea of the bullishness or bearishness going back up to 20 years. But today, I want to look at money holidays. So the holidays I looked at, and I've already kind of preset this up, so I want to walk everybody through. I went through and I looked at the QQQ. And the reason why is because of the 3 indices, technically it's the strongest, okay? Especially if we're going to go into one of these categories again, where we're going to be wearing masks, whether they're going to be cloth masks or they're going to be something high-tech like this thing, then the reopening trades are going to be, the door's going to be kicked in their face, and we could be going back to the stay-at-home stocks. And so a lot of those stay-at-home stocks are tech involved, and tech has just been having such a fabulous year. Why not go with the strong side? So I took QQQ. I went and did a look back, 20 years back, looking at the Labor Day holiday. What happens up to 20 days before Labor Day. That's what I did. And 0 days after. Even though it says 10 days, I just did the before scan. What we did 400 tests on this thing in a matter of seconds. This is what we found out. We found out that on the 20-year back test, this is what came up to be the most effective. 18, 17, 20, 19. These first four are days before expiration. Days before Labor Day, not expiration, days before Labor Day. 18 days before Labor Day, we saw a 1.43% return. 17 days before Labor Day, average return 1.56. 20 days, 1.23. 19 days, 1.45. So we're in that 2 to 3 week time frame. We're in that time frame right now. And so based on that time frame, I see the average profits. Now, the average profits are great when you look at them, just first off. But keep in mind, the Qs are a lot higher than they were years ago. So, if I want to look at the Qs, and I'm going to take a look at these in just a moment, shows me that by buying this particular pattern, it has had an 80% accuracy rating over the last 20 years. All right, that particular pattern. Here's what the particular pattern looked like. All right, so let's get the bad one out of the way first. See that 2001? Does everybody remember what happened in 2001? Yes, markets were dropping, right? The other losers, you had a small loser here in 2005. You had a small loser in 2013, and you had a medium-sized loser in 2015. Look what's happened in the last 5 years. Up, 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 up. And this is a 6% move last year. And I say, oh, that was COVID. COVID made that move higher. Maybe it did. Okay, let's look at 2019. 2019 was up 3.5%. 2018 was up 2.8%. 2017 was up 2%. So if we were to get, let's call it a 3% move, a 3% move in this thing. I mean, look at this, guys. You see this, 2001? The Qs were trading at 36. Isn't that amazing that in 20 years, this thing has gone up tenfold? Because it has. Look at what happened last year. We were above 300 last year. We were at 30 in 2001. If that doesn't say that the stock market typically goes up on average and that you want to be leaning into the long side more often than the short side, then I don't know what does. Right? But there you go. That's the information we're looking at here with the Qs. So we take this information, this spotting this pattern, and what we want to do is step 2. And step 2 is create an alternative risk trade. So that takes me to the stock and option table. Now I'm going to update this because here we are today. I want to go to the most recent time, and I'm going to update this to today. So we got our options over here on the left. This is what we're looking at as the Qs. And I'm going to look at, let's take it up 3%. Remember I said if we even go up 3%, well, let's put 3% on the board so we know what we're working with. Now, I could look at this, here's some options that expire today. Here's some options that expire Wednesday. Here's some options that expire Friday. I don't want to look at those. I want to see the options that expire right before Labor Day weekend. So Labor Day is the first Monday in September. So I want to find those options that expire. Okay, September 1st, maybe. September 3rd, yes, because September 6th is Labor Day. Let's take a look at the options that expire on September 3rd. Run the update, and here we go. All right, calls on the left and puts on the right. I'm interested in the call options today. Now, what are we looking at here? Right now, the Qs are trading around 368.31. So the 368 calls right now are trading for $5.32. All right, 529 by 535. They're pretty tight. I mean, you don't get tighter than this on an option that's not a third Friday option that's a couple weeks out. So 6 cents between the bid and the offer. That's fantastic. If we were to buy a call option for this particular stock, then what would that look like on the graph? that would look like this. So we're going to spend $532. There's a $3 right now. Again, 6 cents between the bid and the offer. That's 3 cents or $3 per contract off from the mid price to the bid and from the mid price to the ask. And that's what we're seeing here. All right. We also see that these call options have unlimited profit potential, but the maximum risk is $532. Now we got a lot of option Greeks over here. All right, I'll save that for the Greeky geeks. But for right now, I'm just looking at what's this going to cost me, and again, where does it go if we see again a 9, or in this case, if we get a 3% move, that's a 10-point, 11-point rise in the stock. All right, so if we're looking at 368 becoming 380, right? What's this option going to be worth by September 3? If we're at the 380, the 379, 378 to 380 area, that option should be worth double its price, all right? Because 379 is 11 points, all right? If you pay 532 for something that's worth 11, you doubled your money, okay? So that's one way to look at it. Now, the other thing we want to look at is what is break even, all right? Because the first question I ask myself is, what if I'm wrong? 373.32 is where we got to be by September 3rd in order for you to break even on this trade. So I see that. That's important to know too, right? So we know where our risk is. We know what our break even is. We know what our target is. Can we do better? And that's the next thing I want to talk about. Can we do better? Right? So yeah, we can do better. Maybe we can. Maybe we can't. Let's take a look at the next idea, and that would be surrounding this particular pattern. And that would be, let's go back to the stock and option table. Let's take that same option we have, the 368 call, and let's see if we could sell against it. Now, we know our target is somewhere in the high 370s. 378 to 379 is going to be 3% higher. If we sold the 379s, and let's risk graph that, this is going to give us a trade that's going to cost us $438, so about $100 less. It also dropped our break even, so we don't have to go as far to break even. And to double this trade, what do we have to do? We have to get to the option spread. It's at 438. It's got to be, to be double that, it's got to be somewhere around $8.80. 876, I believe, is the exact number if we were to get this at 438. All right, so 876 would be a double. Can we get a double with even lower cost? And that's what we're looking at, using the same options we're buying. So again, back to the stock option table. And let's go back down to those options that we were looking at selling. Let's get rid of those. Now, again, what am I looking to do? I'm looking to create a trade that costs less than buying the call options, but it still has the potential to double its money by September 3rd. Let's look at let's drop all the way down to the 376s. We can get $1.65 for the 376s. So let's look at those. So I'm going to -1. That means I'm going to sell the 376. I want to buy again. What am I buying? I'm looking at buying the 368s. They're a 532. I'm looking to sell the 376s. Those are $1.65. That trade can be put on for $367 if you can get it at that price. That trade has a maximum profit of $433. So yes, theoretically, this one too could double in value for a lot less cost. The real question is, can I get this trade for half of what the call options cost me? So for 532, I'm going to need to sell something for about $2.70. $2.70 roughly. Let's see what's out there. One more time. Hit me one more time. All right, so we're going to come back down. I want to clear this out. And I'm looking for something that's, oh, there it is right there. The 373 is $2.73. Now, I know I can cut the trade in half, but can I still potentially get a double? That's the game we play, the guessing game we play when we're going through and analyzing risk. $259. So we did cut the trade in half. but we can only get a 93% max profit to max risk ratio. So we can get close. You know, if I sold the 374s, I could probably do it. I wouldn't be able to pay half. But some of the things I want to show you on this particular trade. See this number here? Break even. I highlighted it. The break even on this trade is at $370.59. All right. We only need the Qs to trade, what, 2 points higher than we are right now? 2 points higher than we are right now. Let's look and see again. Where are the Qs trading at? This was 368.31, and we needed to go to 370.59, so a little bit higher than 2 points in about 3 weeks. And that's what this trade shows us. Now, there's several other ways we could skin this cat. We could look at selling puts. But the problem with selling puts is these are as cheap as they've ever been right now. Right? So selling puts on this particular trade doesn't make a lot of sense to me. And the reason it doesn't make a lot of sense to me is because you're selling cheap vol right now. You're selling cheap volatility. So what I'm looking at here, once again, is we're looking at either just straight out buying the calls and ponying up the $538 plus commission, or looking at a series of different spreads that could lower your cost, lower your risk, lower your break even, and maybe even lower your stress. All right. For those of you that are smaller traders, we're only talking about $530 roughly, $532, $535 for the call, but we're only talking about $259 for the spread. Right? That's two of these and that. Yes, I tore the money. Two of these and that. $259 for that trade. That's a cheap trade. All right, questions, comments. Let's jump to the board and see what's going on with everybody here. So, Mandy, thank you so much. I appreciate the comments. I do. Setting up for beginning hope. I'm setting everything up from beginning. Hope to get it all done today. All right, John. And we could take that a couple of different ways. The way I'm seeing you're doing this is you're setting up being a rules-based trader. All right, because hope is not in the dictionary. You're hoping you can get there as a rules-based trader, because hoping and trading together are two things that I just don't do. Hopium is a drug that we don't take here at Tom's Trading Room. Hopium is not a Greek like delta, gamma, theta, all right, vega. Hopa is not a gamma, is not a Hopa is not definitely not a Greek that we use here. All right. And then, putting this all together, well, finally what I do is I come over and I take a look at, what's going on? What's going on in the market? And of course, I'm looking to get logged back in again. Well, what's going on in the market is basically this. If you want to take a look, we have had a drop off. There's Nvidia dropping down right now. We have had a drop off. This is going into earnings. Not a big surprise to me, but take a look at the Qs again, right? We have a drop off in the Qs. Qs are down 1%. So when I look at the Qs and you look at something like this, you say, well, this gets me a little bit nervous, Tom. When do I want to place this order? Well, what about something I like to do? I like to spread things out a little. Maybe put a little on today, maybe put a little on tomorrow, maybe put a little on Wednesday. Average into a position. Instead of taking all your risk on a trade and throwing it all out there at once, what about averaging into the trade? Averaging into the trade makes a lot of sense, especially on a day like today where you see this drop off that we're having. Okay, 364.59, 365. Now, you know what I'm doing? I'm looking at the 365s today. Okay, I'm going to be doing something in the QQQs big all week long, right? And I didn't want to do it before you, right? I don't jump in and trade things. If I'm setting up a trade here, all right, whether it's in this room or any webinars I end up doing, I don't take the trade. I don't take the trade, not because I don't believe in the trade. It's not that. I don't take the trade because I don't want to be accused of front running, getting ahead of everybody else. So I'm giving you the pattern that I'm going to be trading over the course of the week. All right, guys. So it's 10:30 sharp. Thank you all for joining me. Two quick things, if you could. A lot of red on the screen as we bail out of here. I'd like you to do two quick things before you bail out. Number one, give us a thumbs up. It does help support the channel. Number two, and I got this big announcement I want to mention too. But before that, number two, if you're brand new, welcome to the room. Do us a favor, subscribe. We do 2 or 3 videos here every single week. Next week, my team and I are going to be doing live with the markets. All right. So you got to be here to see it. We're going to be punching in. If everything goes well, we're going to have live streaming shows for you right here on Tom's Trading Room, Monday through Friday. All right. An hour before the market opens. So get ready. I'm going to be telling you much more about that as the week goes on. I'll be sharing that with you in the community tab. So until then, guys, have a great rest of your day, and I'll see you real soon. Bye, everyone.